Have you ever discovered the hidden mystery that turns every investment into a losing bet? I'm Professor Ashford, and for years I thought I understood risk. But then I stumbled on a secret, one buried in history, that changed everything. It was 1720 in London. A man named John Blunt convinced thousands to invest in the South Sea Company. They promised riches from trade with South America. Everyone poured in, nobles, merchants, even Isaac Newton. But within months, the bubble burst, leaving families ruined. Why? Because they all believed the same dangerous idea. That belief? It's called the narrative trap. We invest not in assets, but in stories. The South Sea Company had no real profits, just a tale of endless wealth. A 2020 study by Harvard economist Andre Schleifer found that 70% of market bubbles follow this pattern. A compelling story overrides data. We're wired to believe the narrative, not the numbers. And that's where the trap springs, because when the story shifts, the money vanishes. But here's the twist you won't see coming. Take Isaac Newton. He initially invested in the South Sea Company and doubled his money. But then, caught in the story's momentum, he reinvested everything at the peak. When the bubble collapsed in September 1720, Newton lost over £20,000, adjusted for inflation, millions today. He later wrote, "I can calculate the motion of heavenly bodies, but not the madness of people." The man who understood gravity couldn't resist the narrative trap. Here's the second layer, the certainty illusion. We crave control, so our brains invent patterns where none exist. In 1999, before the dot-com crash, 80% of tech startups had no earnings, yet their stocks soared. A 2018 study in Nature Human Behavior showed that when investors feel uncertain, they double down on stories that promise clarity. This illusion makes us blind to real risk. But the deepest secret is still buried. Consider the story of Pets.com. In 2000, this online pet supply company had no profits. Actually, it lost $3 million per quarter. But its sock puppet mascot was a cultural phenomenon. Investors poured $300 million into the IPO. Within 9 months, the stock dropped from $14 to 19 cents. The narrative was so seductive that even professional analysts ignored the balance sheet. This isn't just history. It's a mirror for today's crypto and meme stocks. But the third layer, the deepest, is something I call the forgetting loop. After every crash, we swear we've learned. Yet within a generation, the same mistakes repeat. In 1637, Dutch tulip mania saw single bulbs sell for 10 times a skilled worker's annual salary. By 1720, it was South Sea. In 1929, it was stocks, then .com, then housing in 2008. Each time, a new story erases the old memory. Why? Because our brains prioritize novelty over caution. And this hidden truth explains why you're probably making the same mistake right now. Meet the tulip mania of 1637. One bulb of the Semper Augustus variety sold for 500 guilders, the cost of a grand Amsterdam canal house. But by February of that year, prices collapsed overnight. A trader named Wouter van der Veen wrote in his diary, "I saw men weeping in the streets, their life savings gone for a flower." The same forgetting loop. The same emotional wreckage, a pattern repeating across centuries. So what ties these all together? It's not greed or stupidity, it's a survival instinct misfiring. Our ancestors needed quick stories to avoid predators. Today, that same instinct makes us latch on to financial narratives without checking facts. In 2021, a study from the University of Zurich showed that investors who consumed more news stories made 15% worse returns than those who focused on raw data. The story feels safe, but it's a trap. And that's why understanding this pattern is the most protective thing you can do for your future. When you ignore this hidden belief, the cost is devastating. A 2019 study by the Federal Reserve found that investors who chase narratives lose an average of 40% of their portfolio value over a decade. Think about that, a decade of lost security. I once met a retiree named Margaret who invested her entire pension in a story about a revolutionary tech startup. She lost everything. Her words, "I believed the promise, not the numbers." That's the price of ignoring history. Here's the truth. The most profitable investment isn't in any stock, it's in questioning every story. When you learn to spot the narrative trap, you stop being a passenger on the roller coaster. You become the one who sees the track ahead. That's real wealth, not in money, but in clarity. If this hidden mystery resonated with you, subscribe to uncover more secrets history forgot. Next week, we'll explore the lost art of reading the